Vector Online. Case file open. June 27, 2017. A software update goes out from a Ukrainian accounting company, and within hours, 65 countries are on fire. This is NotPetya, not ransomware, a wiper, and the most costly cyber attack the world had ever seen. The attackers did not need to breach their targets directly. They went upstream, to the software supply chain. MeDoc was Ukrainian accounting software used by nearly every business in Ukraine for tax compliance. Compromise the update server, and you compromise every company that trusts it. The documented kill point here is the MeDoc update infrastructure itself. A defender would have seen this as anomalous signing or build pipeline activity, an unsigned or newly signed binary pushed through a channel that customers implicitly trusted. No endpoint controls on the target networks would have flagged it, because the delivery mechanism was legitimate software doing what it was designed to do: update itself. The malicious update traveled through MeDoc's normal distribution channel. Customers received it as a routine patch. They installed it, and in that moment, the payload executed with the privileges of the update process itself. There was no phishing email to click, no drive-by download, no user error. The trust relationship between vendor and customer was the weapon. A SOC analyst reviewing this stage would look for process execution logs showing the MeDoc updater spawning unexpected child processes. The artifact would appear in Sysman event logs as a process creation event, the updater binary calling a command shell or writing to disk locations outside its normal working directory. The problem is timing. By the time anyone reviews those logs, the wiper is already running. Once on a single endpoint, the malware had two tools for spreading. First, EternalBlue, the leaked NSA exploit targeting a Microsoft Server message block vulnerability. Any unpatched Windows machine on the same network was a target. Second, Mimikatz, which harvested credentials from memory of the infected host, pulling plain text or hashed passwords of any logged-in user. The defender's signal at this stage is network telemetry. You would see SMB connection attempts spiking across internal subnets, port 445 traffic between workstations that normally never talk to each other, and LSAS process access events in your endpoint detection logs. The kill point is patching. Microsoft released the EternalBlue patch months before NotPetya. Every unpatched machine was a waiting domino. Lateral movement was not quiet, and it was not slow. EternalBlue gave the malware remote code execution on adjacent machines. Mimikatz gave it valid credentials to authenticate as legitimate users. Together, they let the wiper hop from workstation to workstation, server to server, jumping network segments that should have been isolated. Within minutes, entire corporate domains were compromised. The log evidence a defender would chase is authentication logs showing impossible travel or mass SMB session establishment from a single host. Windows security event logs would show logon events flooding from one source IP to dozens of targets in seconds. Network segmentation and limiting SMB traffic between subnets is the documented control that would have starved this stage. The payload was not what it appeared to be. It encrypted the master boot record, the fundamental structure that tells a computer how to start. After encryption, the machine displayed a ransom note demanding Bitcoin payment to a listed address, with an email contact for sending proof of payment. It looked like Petya ransomware. It behaved like ransomware. But it was a wiper. The critical detail is that there was no functioning decryption mechanism. The attackers did not generate or store recovery keys. The email address listed for contact was shut down by its provider within hours of the outbreak. Even if a victim paid, there was no way to recover their files. This was destruction disguised as extortion. The spread was not contained to Ukraine. Any network connection to an infected Ukrainian business was enough. A multinational company with a single office in Ukraine, a supplier relationship, a shared virtual private network, any of those links became a bridge for the wiper to cross borders. Within hours, infections appeared in over 65 countries. Maersk lost 4,000 servers and 45,000 PCs in minutes. The company had to rebuild its entire global network from a single surviving domain controller in Ghana that happened to be offline during the attack window. Merck reported $1.3 billion in losses. FedEx and its TNT Express division reported $400 million. Saint-Gobain reported over $300 million. Reckitt Benckiser reported roughly $130 million. Total global damage was estimated at roughly $10 billion, the costliest cyber attack in history at the time. Attribution came in February 2018, when the White House officially stated that the Russian military, specifically the GRU's Sandworm unit, was responsible for the attack. This was not a criminal enterprise seeking profit. The absence of any decryption mechanism, the targeting of Ukrainian infrastructure, and the indiscriminate global destruction all pointed to a state actor whose objective was disruption, not revenue. The public record confirms the attribution, but does not detail the full forensic trail. What is documented is that Sandworm had previously been linked to attacks on Ukrainian infrastructure, including a 2016 power grid outage. NotPetya fit the pattern, a destructive capability deployed under the cover of ransomware, aimed at a country Russia was actively in conflict with collateral damage treated as acceptable. Where it dies. Every stage of this kill chain had a breakpoint, and at each one, a control existed that would have stopped or slowed the attack. The question is why none of them held. At stage 1, the MeDoc update server, a supply chain security program with integrity monitoring on build and distribution systems, would have caught the compromise. At stage 3, patching the EternalBlue vulnerability was the single most effective control. Microsoft released the fix months before the attack. Every unpatched machine was a willing participant in its own destruction. At stage 4, network segmentation and restricting SMB traffic between subnets would have contained lateral movement to the initially infected segment. At stage 5, endpoint protection that monitors for master boot record modification could have halted the wiper before it rendered the machine unbootable. The brutal lesson of NotPetya is that no single control was enough. Defense in depth failed because depth was absent. Companies had perimeter controls, but no internal segmentation. They had antivirus, but no patching discipline. They trusted their software vendors, but verified nothing. $10 billion later, the kill chain is still the same kill chain. The controls are still the same controls. The gap between knowing and doing is where attacks live. If you want the darker, narrative side of these breaches, our sister channel, Syber Sory, rebuilds real intrusions as cyber thriller retellings. Same breaches, different lens. Find it linked below. Subscribe to What the Kill Chain for the next case file. Bangladesh Bank, February 2016. Attackers spent months inside a central bank's network before sending 35 fraudulent SWIFT transfer messages to the Federal Reserve Bank of New York, attempting to steal nearly $1 billion. They were stopped mostly by a single spelling error in one transfer instruction. Debrief complete. Go hunt.